Get ready to dive into the world of cryptocurrency, where digital assets, market trends, and political decisions collide. During Donald Trump's time in office, Bitcoin and the crypto market experienced major shifts, influenced by policies, regulations, and economic changes. We'll analyze past trends and how they connect to today's market, helping you stay ahead of the game. Make sure to subscribe and turn on the notification bell so you never miss an update on Bitcoin, crypto regulations, and market analysis. Let's decode the past, understand the present, and predict the future of digital currencies together. 1. The crypto market before Trump's presidency. Before Donald Trump took office, the cryptocurrency market was still in its early stages of mainstream adoption. Bitcoin had already experienced major price cycles, but it remained relatively unknown to the general public. In 2016, Bitcoin was valued at around $600, and the total crypto market cap was just a fraction of what it is today. Ethereum was still a new technology, and altcoins were emerging, but institutional interest was minimal. The regulatory landscape was unclear, with governments worldwide debating whether crypto was a currency, security, or commodity. ICOs, initial coin offerings, were starting to gain popularity, leading to a rise in new blockchain projects. 2. Trump's policies and their impact on crypto. During Trump's presidency, cryptocurrency was not a primary focus, but his administration's policies had indirect effects. His stance on deregulation and economic growth contributed to a bullish market that benefited speculative assets like Bitcoin. Tax cuts and stimulus measures led to increased liquidity, encouraging more investment in alternative markets, including crypto. However, his administration also appointed officials who were skeptical of digital currencies, leading to stricter regulatory scrutiny. The SEC cracked down on ICOs, labeling many as unregistered securities, causing a market downturn in 2018. The IRS began targeting crypto investors, increasing reporting requirements for capital gains and income taxation. 3. Bitcoin's price movements under Trump. Bitcoin experienced some of its most dramatic price changes while Trump was in office, including its first major bull run. In late 2017, Bitcoin skyrocketed to nearly $20,000, driven by retail FOMO, fear of missing out, and media hype. The 2018 bear market followed, with Bitcoin crashing to $3,000, causing massive losses for new investors. Institutional interest started growing in 2019, with companies like Fidelity and Bakkt entering the crypto space. The COVID-19 pandemic in 2020 led to a market crash, but Bitcoin quickly rebounded as a hedge against inflation. 4. The role of institutional investors. During Trump's presidency, institutional investors began entering the crypto market, signaling a shift in perception. Major hedge funds and investment firms started recognizing Bitcoin as a potential store of value. Companies like Grayscale launched Bitcoin investment products, allowing traditional investors to gain exposure to crypto. Fidelity Digital Assets provided custody services, making it easier for institutions to hold large amounts of Bitcoin. JP Morgan, which once criticized Bitcoin, eventually started offering crypto-related services to clients. PayPal and Square integrated Bitcoin into their platforms, allowing millions of users to buy and sell crypto easily. 5. The future of crypto post-Trump. After Trump left office, the crypto market continued evolving, with new regulatory challenges and opportunities. The Biden administration introduced more regulatory oversight, focusing on stablecoins, exchanges, and crypto taxation. Institutional investment has only increased, with Bitcoin ETFs and major banks offering crypto services. DeFi, NFTs, and the metaverse have gained popularity, expanding the crypto ecosystem beyond Bitcoin. Central banks are exploring CBDCs, central bank digital currencies, potentially competing with decentralized cryptocurrencies. 6. Trump's stance on cryptocurrency. Donald Trump has never been a strong supporter of Bitcoin or cryptocurrencies, often expressing skepticism about their legitimacy. In 2019, he publicly stated that he was not a fan of Bitcoin and other cryptocurrencies, due to their volatility and potential for illegal activities. His administration, however, did not introduce an outright ban, allowing the industry to grow despite regulatory scrutiny. Trump's appointed Treasury Secretary, Steven Mnuchin, pushed for stricter regulations, especially concerning money laundering and illicit finance. 7. The rise of DeFi and altcoins during Trump's presidency. While Bitcoin remained the dominant cryptocurrency, Trump's time in office saw the rise of decentralized finance, DeFi, and alternative cryptocurrencies. Ethereum's smart contract capabilities paved the way for decentralized exchanges, lending platforms, and yield farming. Projects like Uniswap, Oath, and Compound revolutionized the financial landscape by offering trustless, permissionless financial services. The total value locked, TVL, in DeFi skyrocketed from just a few hundred million to over $15 billion by the end of 2020. 8. US versus China. The battle for crypto dominance. During Trump's presidency, the US and China were engaged in a trade war, which had significant implications for the cryptocurrency industry. China was a dominant force in Bitcoin mining, controlling over 65% of the global hash rate before 2021. The Trump administration took a tough stance on China, which indirectly fueled discussions on reducing reliance on Chinese-controlled mining operations. Concerns about national security and financial independence led some U.S. policymakers to consider domestic mining initiatives. Meanwhile, China accelerated its development of a central bank digital currency, CBDC, the digital yuan, to challenge the dominance of the U.S. dollar. Trump's administration did not focus on creating a U.S. digital currency, leaving it as a topic for future governments. 9. How COVID-19 and stimulus packages affected Bitcoin. The COVID-19 pandemic in 2020 led to a massive financial crisis, but it also played a major role in Bitcoin's growth. In March 2020, the crypto market crashed alongside traditional stocks, with Bitcoin plummeting to nearly $3,800. However, as governments worldwide introduced stimulus packages and money printing policies, investors turned to Bitcoin as a hedge against inflation. Trump's administration approved trillions of dollars in stimulus funds, leading to concerns about fiat currency devaluation. Bitcoin was increasingly viewed as digital gold, with institutions and retail investors flocking to it as a store of value. Companies like MicroStrategy and Square made large Bitcoin purchases, further legitimizing its role as an asset class. 10. The lasting impact of Trump's presidency on crypto. Even though Trump was not a supporter of Bitcoin, his presidency had a long-lasting impact on the cryptocurrency industry. The regulatory actions taken during his time in office influenced how future administrations approach digital assets. Institutional adoption skyrocketed during his presidency, proving that Bitcoin and blockchain technology were here to stay. The SEC's crackdown on ICOs led to the emergence of more structured and compliant fundraising methods. The rise of DeFi and altcoins during Trump's time laid the groundwork for the next wave of crypto innovation. Bitcoin's performance during the COVID-19 crisis proved its resilience as an asset class. And that wraps up another deep dive into Bitcoin and crypto analysis. While Trump in the office, we explored how his presidency shaped the crypto world, from market trends to regulations and institutional growth. But this is just the beginning. Crypto is constantly evolving, and there's so much more to analyze. Don't forget to subscribe and hit that notification bell so you never miss a new video on Bitcoin, blockchain, and crypto market insights. Stay tuned as we continue to decode the ever-changing world of cryptocurrency, regulations, and financial innovation. Until next time, keep learning, stay ahead of the trends, and never stop exploring the world of digital assets. See you in the next video.